Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Happy New Year, John, and welcome back to the show.
Hey, Jim. Happy New Year to you, too. 2018, amazing. Time is just flying. You know, the older we get, the faster it goes.
John, this new book about Donald Trump, of course, his side is saying it's a work of fiction, and the author, of course, is saying it's supported by interviews. What's your point of view on it?
My point of view is that our government's a mess right now, you know. I have no inside information on the Russia dossier or if any of that is true or anything that's in this book that just came out. I think it's safe to say that there's quite a bit of contention in the White House now as it's set up. So probably there's a lot of stuff that we would find entertaining that is true about the U.S. government right now, but I don't have any insight into any specifics at all. One thing that just came across as a headline today is that we're planning a quote-unquote bloody nose kind of surgical strike at North Korea here pretty soon. So if that happens, it'll push a lot of this other stuff out of the headlines and give us something real to worry about going forward. So, you know, hopefully that's not true, but, you know, on the list of things that we should be worried about, I think that's up there. You know, the whole geopolitical thing is terrifying.
Well, I mean, I've heard estimates of 25,000 dead in Seoul every day if the U.S. hits North Korea. Oh,
well, you know, Seoul is 20-some miles from...
It's with artillery distance, yes.
Yeah. Yeah, and you know, North Korea has nukes, so we don't know about their delivery system efficiency, but presumably
they could put one on the back of they could put one on the back of a donkey.
Yeah, I think they could.
You don't need missiles to move them 20 miles.
No, you really don't. So, you know, this feels like a placid world, I think, for a lot of people, at least you know, in their own life. Their stocks are up, they've got a job. You know, nothing, we're not flat out at war, you know, there's no draft or anything, and body bags aren't coming home. That could change in a heartbeat. And hopefully it won't, but it sure does feel like that's on the list of possibilities.
What would strike on North Korea do to the stock markets around the planet?
Well, you would think that the financial markets would recoil from a geopolitical crisis of any kind. However, the financial markets have had some stuff happen in the past couple of years that you would think they would have recoiled from, and they went up. Remember on the election night here in the U.S., when it looked like Trump was going to win at first, stocks tanked, and then within a couple of hours they had turned around and they were rocketing, and they haven't looked back since. So, you know, electing a largely unknown quantity to the presidency didn't do it. And it's completely conceivable in a world where central banks are just shoveling money out the door that war won't do it either, you know? So it's really hard to say what does what in a world of such artificial money, you know? When the world's central banks can between them shovel literally $10 trillion out the door in a week or two if they want to, and that money finds its way into the financial markets, there's no way of knowing for sure what means what. You know, what factor outweighs the other factors when we have some kind of a crisis. So, I would still bet that the next big geopolitical crisis, whatever it turns out to be, will be negative for equity prices and positive for bond prices, because that tends to be how it's worked historically. But history isn't the best guide anymore, just because we've got these new factors. We're at the peak of the fiat currency experiment, and so things are happening that you wouldn't expect to happen. I think in the longer run, say 5 or 10 years, the laws of finance will hold, and too much debt will be punished by a gigantic financial crisis. But in the meantime, you can't predict anything about the year ahead or what any given thing means in the financial markets anymore, just because we don't really have markets anymore. As the old saying goes, there are no markets, there are only manipulations. So the answer to what, war with North Korea or any number of other bad things happening in the world means is it depends on what the governments of the world decide to do about it financially. And we can't know that ahead of time. So, I don't know. This is an extremely uncertain time. And, maybe the only good bet is on volatility, because it's so low right now that it almost can't go any lower. In other words, the world's financial markets are behaving so placidly that never in history has something like that continued. So if it's never happened in the past, then there's a pretty good bet that it won't happen in the future. In other words, we won't have a stock market that goes up by the same amount every day on average for a whole year. It might end up by the end of the year, but it'll probably do so with some spills and thrills, and so volatility, the sense that the market could go either way, will probably return in the year ahead. But that's really the only prediction I'm comfortable making.
And when it comes to the markets too, if there is a conflict with North Korea, I could see Boeing shares skyrocketing.
Well, yeah, defense stocks tend to do well
and now everything's so integrated.
Military crises.
Yeah. So many companies now, they used to just sell running shoes, but I don't know, does Adidas, are they part of the war machine thing?
Well, see, the problem with something like that, though, is that they'll spike when a war breaks out. But at any given time, a war is usually a pretty low probability event. We're talking about it as a possibility, and it's incredibly scary. But I still wouldn't give us, 50-50 odds or anything on it happening. It's probably, a 5% possibility. And, were it to happen, it would be this huge earthquake, for a lot of the world. But, it's hard to imagine it. Well, we can't know ahead of time whether it's going to happen or not. And so if you buy defense stocks based on this fairly low probability event, then you've got, let's say 5% chance, 5% chance of them spiking and you doubling your money, and then a 95% chance of them doing pretty much what they would do in normal times, which might or might not be going up. I don't know. So I don't know how to play stuff like this because, people rattle sabers all the time, countries do. But then they also frequently go to war. And we're making noises like we're ready to throw down, And we can only hope that somehow, some way, we all talk our way out of this, and it doesn't end up being either of a war with North Korea or a certifiably crazy North Korean regime with ICBMs that can hit North America. Either of those two outcomes is pretty bad. And the only good one is some kind of an accommodation where we make completely sure that they don't have nuclear weapons, but we do it in a nonviolent way. So I don't know. This is way above our pay grade here, Jim.
Well, Vancouver's going to be hosting a meeting on North Korea very soon, so we'll be right at the front line, I guess, of what's going to happen with that crisis.
I didn't know that. You guys are hosting the South Korea and North Korea meeting? Because they were going to talk.
Canada, U.S. co-hosting meeting on North Korea in Vancouver.
Oh, okay.
with Tillerson on January 16th.
All right. Well, good. Why don't you guys just make them all calm down, please?
Well, first of all, we have several good Korean restaurants here that
there you go.
that we should be hosting these meetings at. The food is excellent, by the way. And so, yeah, they're calling it the Vancouver Conference or the Vancouver Group. But I think the only people here who won't be here are the North Koreans.
Well, maybe they'll meet with South Korea and work something out, and then South Korea will come back to us and say, "Hey, we have a deal." That feels unlikely, but we can hope. Because this is really serious. When the kinds of weapons that we've developed over the last 50 years are just insanely powerful. I don't think people really get what a hydrogen bomb does. It could take out half the U.S. East Coast and kill tens of millions of people, depending on which way the wind is blowing.
Well, I try to explain an atomic bomb takes out a city. A hydrogen bomb takes out a region. The fireball itself is 25 miles across. So anything within 100 miles is going to be totally affected by it.
Yeah, so, Manhattan is a graveyard if it hits there, for instance, or Washington, D.C., same thing.
And you don't have to have an accurate delivery system. As long as you're within 50 miles of your target, you've taken it out.
Yeah. And the way ICBMs are what they call MIRVed now, multiple reentry vehicles are attached to one missile. So the missile goes up, and then a whole bunch of warheads come down. So it's almost like a shotgun, only with each pellet being able to take out, 100 square miles.
And each one of those can spray out a decoy or 10.
Yeah.
So even if you have a good anti-missile system, which we don't, I mean, it's hit or miss about 50% of the time on one target. What's it going to do with 30, with only 5 or 6 of them actually being real ones?
Yeah. See, it's when you actually think about what we can do, war becomes inconceivable. And you have to hope the guys in charge of the nuclear powers have that same attitude. And then, it's not just nuclear weapons now. We have bioweapons, and they're building really dexterous robots that could make pretty intense super soldiers if they're animated by artificial intelligence. If we've got cars that can drive on the freeway without human intervention, then we're pretty close to robot super soldiers
or robot tanks. Well, a robot super soldier doesn't have to be like the Terminator, where it walks like a person. It can be any configuration that is dangerous and is self-managed, that it's smart enough to go out and follow a general set of instructions to kill certain people and blow up certain buildings. So it can be a tank, it can be a plane, it can be a submarine. They're working on autonomous subs right now, or drone subs. Things that they don't have people in them but do have weapons, So I think the only way we survive as a species is if we get our act together really soon here, because we can never have a world war with these kinds of weapons. Anyhow, that's... well, Einstein said it best. He said, I don't know how World War III will be fought, but I can tell you World War IV will be fought with sticks and stones if we're still around. Yeah.
Yep. And that is absolutely right. That's not even hyperbole. We have the ability to wipe out entire countries now. Terrifying. Okay. But... Well,
let's talk about some financial stuff.
Yeah.
I'm
way out of my area of expertise when we talk about, extinction level war. But
because I just saw a headline too in one of the Asian financial papers where South Korea is considering a swarm drone attack on North Korea's glorious leader, where thousands of these small drones with explosives attached would be programmed to go after him by facial recognition.
Yeah, I forgot about drones. That's right. Yeah, you can have AI managing little things as well as big things. And you send them out there with just enough explosive to blow up a head or something, right? And then they're swarming all over the place, blowing up every head they see. Jim. So let's assume that this doesn't happen, okay? And that we make it through the next couple of decades without destroying the human race. Then we have some financial decisions that we have to make.
And we'll talk about those decisions right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're talking with John Rubino. John, when it comes to making financial decisions, cryptocurrencies have just taken over the financial news like crazy. All my friends at every party are talking about how they've either made money or plan to make money on Bitcoin and other cryptocurrencies. Has this become such a fashionable mania that it is really the tulips of the modern age?
Well, not tulips. I think it might be more analogous to the dot-coms because, that's a sector that took off and got incredibly overvalued in the 1990s and spawned a whole bunch of wannabes. There were for every Amazon.com there were 100 little dot-coms that wanted to be Amazon. A lot of them disappeared, and we had a huge price correction that took down the prices of even Cisco and Amazon and Microsoft. They all plunged. But they went on to change the world. And it's possible that cryptocurrencies are something like that, where, we're creating new cryptocurrencies on a daily basis. We have over 1,000 now, and via initial coin offerings, new ones are coming out all the time, which means that we probably don't need 1,000 cryptocurrencies, but we may end up with 5 or 6 or 10 or 20 or 2 or 3, I don't know in the end. But we'll end up with some that are fully functioning and valuable and really important in the financial world. And if that's the case, then it becomes a question of trying to pick those winners and ignoring all the rest. And I'm completely unqualified to do that. Because new ones are coming out all the time. And clearly Bitcoin and a couple of others are dominant right now, but they're vulnerable to a better mousetrap. If you bring out something that just works better on some level for some broad application, then that new cryptocurrency can replace the old cryptocurrency. And it's not clear that network effects are making the big guys invulnerable yet. Amazon, there were very few e-commerce companies that looked like a threat to Amazon back in the day. It's not clear that we're at that point yet where Bitcoin is Amazon and it's untouchable, and then the battle is for survival among all the little players out there. I don't know. But that might be the dynamic going forward, where there's the boom that's going on now. Huge amounts of money flow into the sector. Then there's the inevitable really big correction that happens when something is this brand new and untested and not well understood by momentum investors and everything. And that washes out the riffraff, and leaves a few powerhouse versions standing. And then the market dynamic becomes a lot clearer. I think that's one possible way this could go. Although, really, this is uncharted territory. Just like the dot-coms back in the day. That was something that had never happened before. We didn't have e-commerce companies before the 1990s, and it wasn't clear how many would fit into the market or if, any of them were really going to survive long term. And they ended up revolutionizing almost every aspect of the information economy. So it's possible that cryptocurrencies, or the underlying blockchain technology, end up having a seismic impact on the financial world. That would be cool. Fiat currencies are a really dumb idea that should have died sooner than this. So if cryptocurrencies are what ends up wiping out these unlimited printing presses in the hands of bureaucrats and central banks, then that's a good thing. But we'll see. I don't pretend to have any real idea of exactly how this plays out in the future. But it's an interesting innovation, and it changes the financial ecosystem potentially in a really dramatic way.
China's excuse for cracking down on Bitcoin is the amount of energy is needed to mine just one Bitcoin. They said at the current rate it could end up sucking up 20% of the country's energy supply in just a year or two.
Yeah, there's definitely that. It's very energy intensive. So it's not, green. But of course, the banking industry is doing lots of transactions which add up to quite a bit of energy as well. And gold and silver require a lot of energy to dig out of the ground. So no form of money that we have is, like an electric car, like a zero energy endeavor. So it's not clear that that's a fatal flaw of cryptocurrencies, but I don't think it's the biggest reason that governments are concerned about cryptocurrencies. These things are a direct threat to fiat currencies, which are the source of immense power for governments. If you can create money out of thin air, you are God. You can do anything, and that's the kind of thing that governments have learned to assume is their birthright. They just think it's their right to print or otherwise create unlimited amounts of money and then spend it however they want to, mostly to increase their own power. But that's not something that's historically normal. Prior to 1971, the money supply was constrained in most places and most times by a connection to gold or silver or something else. The money supply could only grow as fast as the gold supply grew for most of recent human history. And that limited the power of governments because they couldn't just go, okay, we're going to invade all 5 of these countries that we don't like, and then we're going to give our people cradle-to-grave entitlement plans. We're going to do it all at once. That's what we do now. But they couldn't do that back then because to do those things, they had to actually go get physical gold. And that's not easy, right? You got to dig it out of the ground, and you get maybe 2% more total gold supply each year when you're digging it out of the ground because it's hard. So that limited the power of governments. Governments hate that, obviously. If you're a power-hungry person, which is the kind of people who are attracted to high government office, then something that takes away some power from you is anathema. It's the definition of evil. And so to a lot of governments, cryptocurrencies are becoming that kind of threat. So the next few years will be defined in some ways by how governments respond to the perceived threat of cryptocurrencies. If they, just flat out make them illegal, then we got one situation. If they try to regulate them but allow them to exist as more or less legal tender, then that's a different situation. And if they try to co-opt them and make an official cryptocurrency and make everything else illegal as money, then that's something altogether different. We don't know what they're going to do or whether they'll all do the same thing or each country will try some new, unique strategy vis-a-vis cryptocurrencies. We'll just have to see how it turns out. But I think the emergence of cryptocurrencies and the evolution of the global financial system will be determined to an extent by how governments react to them getting as big as they are.
Well, right now the U.S. Fed said Bitcoin isn't big enough for them to even give it a thought, but are they being foolish by not thinking about it?
They're thinking about it. They're publicly not paying any attention to it because to admit they're worried would be bad potentially for the value of the dollar. And they don't want to do anything that makes the currency that they're managing look bad. But they're worried because cryptocurrencies went from nothing to several $100 billion of market cap in a very short time, and they're not really slowing down. And there's no, the amount of paper currency that's out there is orders of magnitude higher than the value of today's cryptocurrencies. So they got a lot of room to run if they supplant crypto or fiat currencies. Well before that happens, governments are going to try to stop it from happening. And the question then becomes, how big do cryptocurrencies have to be before governments just, don't kid around anymore and sit down and figure out a way to stop them from growing any further or from becoming a greater risk or whatever. Whatever they define as success with cryptocurrencies, they come out with more or less coherent plans to do that. I think 2018 is going to see some more China-like stuff. China did some things. They're what now? They're cracking down on Bitcoin miners because of the electricity. They've cracked down on Bitcoin exchanges I don't know what their stated reason is for that, but it's probably because they see it as a threat to their own domestic currency. Other countries are taxing Bitcoin as if it's a commodity, which means every transaction you make with a cryptocurrency, you got to pay a tax on it. It's a taxable event. Or you have to take a tax loss on it, depending on whether it's up or down from where you bought it. And that's a lot of paperwork if you're going to use it as money. And, imagine having to pay taxes on every dollar you spend. And that's the...
Well, I was also going to ask, in China now, the most popular thing to do is to pay bills and buy things with your telephone, and it's peer-to-peer. You bypass the banks. They don't get a fee like they do with Interact.
Yeah. Well, banks are just intermediaries. We can buy and sell with cash as well, and not necessarily have any kind of a fee involved.
Well, I know several of the restaurants where I live in Vancouver take cash only because they're tired of paying fees to the credit card and debit card companies.
Yeah, and see, that's how it works with money. Now, if cryptocurrencies are defined as a commodity, that means each purchase and sale has tax implications for the people in the transaction. So then, if you try to use Bitcoin at your restaurant, maybe they take it, but then that transaction is a capital gain or a capital loss for you. And that would make it not worth it, I would think, unless the exchange that you use does all the bookwork for you and just keeps track of it and just presents you with a number at the end of the year. I don't know. But that seems like that's something that a government can throw in the path of a cryptocurrency and make it less attractive for people who might want to use it as actual money.
We'll have more with John Rubino right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with John Rubino. So, John, in a world now where we're using totally artificial money in some cases, what about traditional things like gold and silver?
Well, they should become more valuable over time as fiat currencies become less valuable. It's a little surprising that they're not a lot more valuable now than they are in terms of fiat currencies, because we've inflated the supply of fiat currency and related credit out there immensely in the past 30 years. So gold is up. I mean, it was $200 and some in 2000, and it's $1,300 US now. So that's, that has protected people against the devaluation of the dollar that's been ongoing since that time. But it hasn't been a parabolic asset like tech stocks or cryptocurrencies. You made more money in those other things than you made in gold and silver. I kind of think that changes at some point in the not too distant future. Financial laws can be bent but not broken, and I think they'll reassert themselves pretty soon, where people are going to look at the supply of fiat currency that's out there, compare it to the available supply of gold, and say, okay, at what price of gold, what gold price, do these things balance out? In other words, if you wanted to go back to a gold-based currency, what would the price of gold be that would allow you to back, say, 50% of your country's money with gold? And the answer is $10,000 US or higher. And when people start running those numbers and conclude that, well, okay, if that's the intrinsic value of gold vis-a-vis fiat currencies, and it's, 1/8 that price, then it's a value play. It's undervalued dramatically. And people who have 10,000% profits in cryptocurrencies and are looking to protect some of those profits would see gold and silver as really good ways to protect their currencies, or to protect their profits. So it could be that the cryptocurrency boom is kind of this intermediation where money flows into cryptocurrencies and out of fiat currencies, but then it doesn't flow back into fiat currencies. It flows from the cryptocurrencies into gold and silver. And that means what is happening now is a delay of precious metals run to up to their intrinsic values, which are much, much higher than today, but not an elimination of that run. It's still going to happen. It just was delayed because we had this cryptocurrency thing in between. So I don't know. We'll see. Or maybe we end up with a gold-based cryptocurrency, which would be the libertarians' ideal monetary system. A transaction mechanism that replaces the big banks and government regulatory agencies based on a kind of money that bypasses the world's central banks. So that would be cool, but who knows? None of this stuff is really easily predictable right now.
Well, right now, Russia and China are stocking up on every piece of gold they can find. Countries like Canada and Britain have sold off all their gold at bargain rate prices. Who's right?
Well, yeah, we kind of did an experiment over the past 10 or 15 years where the West divested itself of a lot of gold and silver, and the East bought it all up. So at some point, the market will make a decision and reward one of us for our actions and punish the other. And I suspect that the market will reward the East for buying all that gold at really cheap prices and make us look stupid in the West for selling it all at, a tenth of what it's worth in 2025 or whatever. That's not yet, but I think that day is coming. And I think that it's highly likely that the guys accumulating gold now will be glad they did it a few years hence.
Well, we had the Canadian government selling off valuable gold coins worth a whole lot more than their face value and just melting them down for bullion.
Yeah. I don't know.
Exactly.
The Western central banks do so many dumb things that it's almost like they've got some agenda beyond just trying to maximize the utility of their reserves, right? It's like they're doing something else because selling off their gold is just not a smart thing, especially with interest rates really low. I mean, if interest rates on treasury bonds in your central bank reserves are 6, 7, 8%, then the difference between cash flow from gold, which is 0, and cash flow from those bonds, which is 6 or 7 or 8%, that's pretty big, and that gives you a rationale for selling your gold because every single year after that, you make a lot more cash flow. But now with interest rates really low, there's not much of an advantage in owning, for instance, German bonds, which yield nothing, mostly, or U.S. bonds, which yield only a couple of percentage points. So it's not clear why any central bank in the West would sell gold now in return for cash, which they would then use to buy something that doesn't yield anything but's denominated in a depreciating fiat currency. Doesn't make sense.
Well, that's why the government did it.
Yeah.
If it doesn't make sense, the government will do it. John, thank you so much for chatting with us.
Sure thing, Jim. Thank you.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.